The possibility that you attempt to time buys in light of what you think business will do in the following year. While I think that's the greatest mistake that investors make because it's always uncertain. People say, well, it's a time of uncertainty. It was uncertain on September 10, 2001. People just didn't know it was uncertain. It's uncertain every single day, so take uncertainty as part of being involved in investment at all, but uncertainty can be your friend. I mean, when people are scared, they pay less for things. If I buy a farm near here and you know it ends up being a horrendous year and bugs come in and there's no rain and all something like that, am I going to sell it for half the price of the value that it was selling for a year sooner? When I know over the next 100 years there's going to be 90 years that are pretty good, and a few bad ones, it doesn't make any sense to try and time things that way, and nobody knows what's going to happen tomorrow ever. The only thing is they get very apprehensive about it at certain times, particularly when others are anxious. When individuals get terrified, they get terrified as a gathering. The confidence comes back sort of one at a time, but there has been a lot of things that have been cleaned up in the economy in the last 18 months. A lot of the toxic assets are in better shape. There are going to be 4.5 million homes or thereabouts sold this year. There are 80 million homes generally in the country. 25 million of them don't even have a mortgage. Of the 4.5 million homes that are sold, the people that are buying those are putting down reasonable down payments. In many cases, they're buying them much more cheaply. They're covering it better with their income. The liar's loans have disappeared to a great extent. So every day those homes are going into better hands. 4.5 million homes will be in better hands, stronger hands, people that can handle the payments better. So the system is cleansing itself, but it doesn't do it a day or a week or a month or even a year. A question was asked to Warren Buffett that was biggest mistakes people make when investing, and he replied, well, they just don't realize that all you have to do is just buy a cross-section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm or you buy an apartment house, you can't resell it tomorrow, and you know the cost of moving around. Or you get something handed to your liquidity, which is instant, you can sell, and the cost of doing it are pennies, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing. The idea that the European news or slowdown in this or that or anything like that would not cause you, if you owned a good farm and had it run by a good tenant, you wouldn't sell it because somebody said, here's a news item, this is happening in Greece or something of the sort. If you owned an apartment house and you got to raise your rent a little, as well located at a good manager, you would dream of selling it. If you had a good business personally, like the local McDonald's franchise, you wouldn't be thinking about buying or selling it every day. Now, when you own stocks, you own pieces of businesses, and they're wonderful business. You can pick the best businesses in the world, and to buy or sell on current news is just crazy. You're in a wonderful business. You got people running it for you. You're going to do well over 5 or 10 years, and to think news events should cause you to try and dance in and out of something, that's a wonderful game. So get into a bunch of wonderful businesses and stay with them. I bought my first stock, when I was 11 years old, and it was about 3 months after Pearl Harbor and Corregidor was falling, and they had the death march at Bataan, and all the news was terrible. It was a great time to buy stocks. And I should have held that stock forever, and I've been buying stocks ever since. Another question that was asked was, I know you're famed for your success, but I was curious if there were any particular moments in your life or mistakes or failures that you've made that were particularly memorable, what you may have learned from them, and if you have any particular advice for the students here in dealing with the discouraging circumstances. He replied, yeah, well, I've made a lot of mistakes. Biggest mistake? Well, not the biggest necessarily the biggest, but buying Berkshire Hathaway itself was a mistake because Berkshire was a lousy textile business, and I bought it very cheap. I've been taught by Ben Graham to buy things on a quantitative basis, look around for things that are cheap, and I was taught that we'll say in 1949, or they made a big impression on me. So I went around looking for what I call cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts and you find this terrible looking soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff, disgusting, you throw it away. But it's free, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake, although you make money doing it, but you can't make it with big money. It's so much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks, and Berkshire was selling below its working capital. Per share, you got the plants. For nothing, you got the machinery. For nothing, you got the inventory and receivables. At the discount, it was cheap. So I bought it, and 20 years later, I was still running a lousy business. And that money did not compound. You really want to be in a wonderful business, because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff, but staying with those kind of businesses is a big mistake. So you might say I learned something out of that mistake, and I would have been way better off taking. What I did with Berkshire is I kept buying better businesses. I started insurance business, Candy the Buffalo, all kinds of things. I would have been way better doing that with a brand new little entity that I'd set up rather than using Berkshire as the platform. I bought half interest in the Sinclair filling station, was about 20 with the guy who was in the National Guard with, and I had about $10,000 then, and I put $2,000 in and I lost it all. So that was 20%, and that means that the opportunity cost is now $6 billion of that filling station, which is a big price to pay for getting to wipe a few windows and a few windshields and things like that. So actually, I like it when Berkshire goes down because it reduced the cost of that mistake on an opportunity. Because biggest mistakes I've made by far are mistakes of omission and not commission. It's the things I knew enough to do. They were within my circle of competence, and I was sucking my thumb, and those are the ones that hurt. They don't show up any place. I probably cost Berkshire at least $5 billion, for example, by sucking my thumb 20 years ago, or close to the one. Fannie Mae was having some troubles, and we're going to bought the whole company for practically nothing, and I don't worry about that if it's Microsoft, because I don't know it, cause Microsoft isn't in my circle of compliments. So I don't have any reason to think I'm entitled to make money out of Microsoft or out of cocoa beans or whatever, but I didn't know enough to understand Fannie Mae, and I blew it. And that never shows up under conventional accounting. But I know the cost of it. I passed it up, and those are the big mistakes, and I've had plenty of them unless I tell you about them in the annual report. And I resist the temptation sometimes. Unless I tell you about them in the annual report, you're not going to know it, because it doesn't show up under conventional accounting. But old mission is way bigger than combination. There's big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake, almost, as not doing it at all. You've really got to them when they come, because you're not gonna get 500 great opportunities. You would be better off if when you got out of school here, you got a punch card with 20 punches on it, and every financial decision you made, you used up a punch. You'd get very rich because you'd think through very hard. Each one of you wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, if particularly during bull markets. In stocks is so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up the point, and get excited about that. You buy another one the next day, and so on. You can't make any money over time doing that, but if you had a punch card with only 20 punches, you weren't going to get another on the rest of your life. You would think a long time before every investment decision, and you would make good ones and you'd make big ones, and you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.